Hello there. Good morning and compliments of the season to you. My name is Victor Aluyi and I'm the head of investment advisory at Sankore Global Investments. And this is your weekly financial market roundoff. We start off in the US where stocks closed high on Friday on better than expected jobs reports. The S&P added 0.25%. The Nasdaq was up 0.81%. Both indexes actually touched all-time highs and closed at records, during the session, while the Dow slipped 0.28%. The S&P and the Nasdaq notched their third straight positive week, rising by 0.96 and 3.34% respectively, while the Dow slipped 0.6% during the week. The November jobs report came in at 227,000 jobs created, better than the 214,000 jobs that the market had expected, also marking a significant increase from October's revised 36,000 jobs, while unemployment inched higher to 4.2%. Following the November jobs reports, the market is now pricing in an 85% chance of a rate cut this December. The Federal Reserve is meeting on the 17th and on the 18th, and the decision will be out on the 18th. So the market really is expecting that, with this sort of job number, the Federal Reserve is likely to cut another 25 basis points. We're essentially seeing a labor market that remains resilient, but it is softening, and that provides some impetus for the Fed to lower rates. Also last week we saw Bitcoin top the $100,000 point mark. This was a major moment for the crypto community, and we're very, very significant. It has, however, receded below that 100,000 point mark and is now trading around $99,000. Going into this week, really, I think the major data points that the market will be looking out for is that inflation data. Both the consumer price index and producer prices will be out this week. For CPI, the market expects a 2.7% reading year on year and a 0.3% reading month on month, which is just slightly higher than the previous reading that we saw, for October. And this data point will prove really, really crucial in determining what the Fed does definitively at its meeting in December. Also, crucially, the path of rate cuts, what it would look like, going into next year. Over in China, the struggle with that deflationary concern, continues. Inflation came in at a 5-month low, rose about 0.2% year on year, which was lower than the 0.5% that had been expected and the 0.3% that we saw in October, while producer prices declined for the 26th month, fell by 2.5%, less than the 2.8% that was expected. So again, this near zero inflation in China continues to reflect its struggle with, domestic demand. And this is in spite of the slew of stimulus efforts that we have seen since September in particular. Nevertheless, some areas in the Chinese economy have shown some improvement. We saw October retail sales and also manufacturing activity coming in stronger than expected. Top leaders in China are expected to convene at the annual Central Economic Work Conference that starts on Wednesday. Purpose of this meeting really is to outline goals and also stimulus measures for 2025. Top on the agenda will certainly be how to really reflect this economy that continues to falter, even in the face of significant stimulus that we've seen. The market will also be looking for specifics in terms of both fiscal and monetary stimulus in the hopes of really reflecting growth in the Chinese economy. Over in Korea, in what could be described as a bizarre move, the president declared martial law last week. However, this was met with very, very stiff resistance from the people really, and from the parliament in particular, and that decision was quickly reversed. Nevertheless, it had created quite some panic in the market, leading to the Bank of Korea pledging liquidity support for the market to the tune of about 50 trillion won, which was really, really significant. And the development still continues there, really, because the opposition party has moved for impeachment for the president. At the first instance, that did not sail through. The understanding is that we're likely to have a second trial, a second hearing for that. So the situation in South Korea remains really, really fluid. It is the fourth largest economy in Asia, and developments there really would have very significant impact on the broader region. Just on the back of this, we've seen the won actually slip. That's the South Korean currency, and the near-term prospect really remain quite uncertain, particularly as these impeachment hearings continue. Over to OPEC and the Middle East, essentially. OPEC has, postponed plans to unwind, several formal and voluntary crude production cuts into 2026. This is just amid, lukewarm outlook for global demand. If you look at its formal output strategy, it is now limiting its combined daily production to about 39.725 million barrels per day up until the end of 2026. So essentially, OPEC is now extending its 2.2 million barrels per day and 1.7 million barrels per day voluntary production cuts into the first quarter of 2025 and the remainder into the end of 2026. The idea is that, given, the sort of outcome that we begin to see in the market, an incremental hike in production will set in between April and September of 2026. I mean, it's important to point out that in spite of these production cuts or production really being held back, all of the geopolitical issues in the Middle East, that oil prices really have remained subdued, just on the back of tepid demand, particularly coming from China, and also the likelihood that we'll see a significant increase in U.S. production as Trump assumes office. I mean, the U.S. is the largest producer of crude right now. So once Trump comes into office and that whole idea of drilling more takes the fall, so you're going to see a significant increase in production, and you juxtapose that against a situation where demand is really weakening. So clearly, the fundamentals for the oil market remain weak, and really the risk for prices, essentially is skewed to the downside. Also in the Middle East over the weekend, we saw some very momentous developments. The Assad regime, after a grueling 14-year civil war, was toppled, over the weekend. That regime had essentially been propped up by Russia and Iran, and clearly over the weekend that couldn't hold anymore. Clearly, Russia is also being stretched with what is going on in Ukraine, and obviously wasn't able to commit more to ensure that the Assad regime, stayed in place. I think what is really critical and poignant is, who takes over, what coalition takes over, where do they lean towards, what the implications would be, really. So clearly, the situation in Syria is still fluid. The entire region is still, there's still a lot of uncertainty there, really. So we'll really be looking out to see how things pan out, with that regime or with that country over the next couple of weeks. Really clearly, again, this increases the sector of geopolitical risk going into next year. Locally, system liquidity opened Friday at a little over 600 billion. However, we had a normal auction on Friday where the central bank sold about 772 billion, and that significantly reduced, the liquidity with which we went into the weekend, and that increased OBB and overnight rates. The fixed income market, both bond and treasury market, were really, really quiet as participants essentially looked to see the outcome of that, OMO auction. And the OMO auction, like I said, the CBN sold 772 billion on a one-year paper, which closed at 23.98, slightly shy of the 24 that we had seen over the last couple of auctions. And this is then bringing to the fore the talk around the fact that have we seen rates peak? Also, if you consider the fact that we saw the currency gain, strongly last week, also on the back of the fact again that we saw a successful 2.2 billion dollar euro bond issue last week as well. These are beginning to show and create questions and concerns around the fact that we probably have seen the peak of rates, and we could see rates start to normalize or come back down. Again, that really remains to be seen. We'll need to see, whether we are seeing, the gains in the currency stay sustainable, and really what happens to inflation, at least in the near to the medium term. That pretty much wraps it up for our financial market up. We hope that you do have a very, very productive week. Thank you very much.